Hey everyone, welcome back to Alpha Insights. I'm Kristen.
And I'm Lucy. Great to have you with us today. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
All right, let's talk Scott's Miracle-Gro. Big brand in lawn and garden. You know the names. Miracle-Gro, Scott's, and the company just reiterated its plan to recover margins while spending more on marketing and digital tools.
Right, and to set the scene, the stock is trading around $63.96. Market capitalization roughly $3.71 billion, and a dividend yield near 4.35%.
So the real question here is whether that margin recovery story is enough to justify the premium the market is paying.
Exactly. On one hand, you have a number one brand in the US lawn and garden segment, strong shelf presence, and deep retail partnerships that are hard for small brands to duplicate.
And on the other hand, the numbers have been messy lately. The company reported about $354.4 million in revenue in the last quarter, but also a net loss of $44.6 million.
Yeah, that's a tough one. Trailing 12-month earnings per share sits at $1.46, but return on equity is deeply negative, roughly minus 110%, partly because of that loss and balance sheet items.
So management is pushing a two-pronged approach. Cut costs by getting margins back to where they were, while investing in year-round demand through influencer marketing, AI-driven customer engagement, and even sports sponsorships.
That marketing pivot is interesting. They want gardening to move from seasonal to more consistent engagement. If that sticks, it could stabilize top-line sales and help margins through higher repeat purchase rates and better digital conversion.
But there are some big ifs here. Shipping and freight costs remain elevated, and there have been regional disruptions around major shipping choke points that have pushed costs higher.
Exactly. Analysts have been flagging that freight and commodity swings are the wild card. If shipping normalizes, the margin recovery story becomes credible. If not, it could eat into any gains from marketing.
One quick technical point. Volatility is higher than average. The stock's beta is near 2, so expect sharper moves around earnings or macro headlines. Traders should brace for that. Looking at valuation, the trailing price to earnings is north of 40, while the forward price to earnings is closer to 22.9. The market is clearly pricing in material earnings improvement.
Right, and analysts are split. Consensus tilts to a positive view, with a mean price target around $75, which implies roughly 17% upside from current levels. But some big banks have pared back their ratings, citing valuation and freight risk.
So the bull case is basically margins recover, marketing works, shipping costs come down, and earnings accelerate. That scenario takes the stock much higher. Some models even put a bull target near $95.
And the bear case is the mirror image. Prolonged shipping pain or execution slips on marketing could force guidance cuts and a rapid re-rating. A downside scenario some models point to is around $45,
which is quite a range. It all comes down to execution and the macro backdrop. So for listeners who are watching, what's the practical thing to monitor?
Watch margin trends and free cash flow, plus any commentary on freight and input costs in the next earnings update. Also keep an eye on inventory and retailer signals. Promotions or inventory builds can foreshadow demand shifts.
Short reaction? Interesting.
Right.
Quick reminder, we are not giving investment advice here. Analysts note these are scenario-based outcomes, and the right move depends on your own goals and risk tolerance.
Totally. To wrap, 2 final quick takeaways. 1. Scott's has a durable brand and a clear play to push gardening year-round. 2. Margin recovery hinges on shipping normalizing and effective execution, and the valuation already assumes a lot of that success.
All right, that's our look at Scott's Miracle-Gro. If you want more detail or to ask about numbers we mentioned, head over to stockalpha.ai.
Got questions? We'd love to hear from you. Go to stockalpha.ai, where you can ask us anything and we'll answer live. And while you're there, check out more market content. Thanks for listening.